Hello and welcome back to Ask ByteTree, where we talk about the latest on-chain activity that's happening on Bitcoin and the wider digital asset industry. We will be taking questions from you in the chat, so please just drop them in there and we'll get to them as they come in. But before we do that, and while we wait for the questions to come in, Charlie, this week we were talking about Dogecoin. Tell us a fun or perhaps a frustrating fact about Dogecoin.
Well, the charts in the insight that I wrote yesterday, and I don't know how the hell this is possible, but Dogecoin has outperformed Bitcoin since it came to be in 2013, which is somewhat ridiculous. There's been a sort of 10x range that they've consistently traded in between them. If you essentially, when Bitcoin was asleep, when the crypto market was asleep, then Doge would be at the 10 level relative to Bitcoin, and it would be at the 100 level, so 10 times higher at the top of bull markets, like in 2013, 17, and now it's at the 250 level. So it's just, it's in a place that's never been before relative to Bitcoin. The Doge space is worth $40 billion. The number of transactions has barely changed whilst this has happened. The value being transferred is pretty high, but it's on the, as I said, it's on the few transactions. So it's basically big money. I think the other point about Doge is the inflation rate's down in the 3%. So it used to be considered a very high inflation coin, but it hasn't had a halving since 2015. So it's going to have the same inflation statistics as Bitcoin in 100 years. And that's sort of somewhat hilarious, isn't it? But there's been very little infrastructure built around Dogecoin, but I gather it's quite widely accepted in the sort of community.
Accepted as a payment, is that, or just accepted as
as a payment? And
okay.
But that's a sort of fan club thing. I mean, it's not going to take over the global financial system. Well, if it does, I mean, that would be truly hilarious, wouldn't it? That a dog comes through. But they are, it is a funny thing to follow. And that dog keeps popping up with that funny language, and people sort of warm to it. And I always find that when crypto is you get very, very heated debates and so on, I think Doge sort of calms everyone down, and it is quite amusing. But of course, it's Musk, isn't it?
Yeah, he's certainly been a catalyst here in driving the market capitalization up. But what's really interesting is, it's not so dissimilar to Bitcoin. I don't know how well distributed the network is, but when you look at it and you say, okay, the name's different and perhaps a bit silly with a picture of a dog, but one man's silly is perhaps another man's sort of sophisticated. Just to say that everyone has a different opinion about these things. Why couldn't it be as useful as Bitcoin as a store of value if it runs on the same technology, has a similar inflation schedule?
It's the same. Litecoin, Bitcoin, Dogecoin, they're all UTXO coins. They're the same design. Block is every minute rather than every 10 minutes. Other than that, there is no difference. I mean, Mark's in the background. He's probably screaming, saying, Charlie, you're absolutely wrong. Feel free to interject, Mark, if I am wrong. But I think they're the same design. And so
I think they're very similar. Yeah, I think what's interesting is ultimately, like we've seen this with Ethereum as a smart contract platform, it comes down to that network effect of developers and users. So if there are people who, for one reason or another, really care about Doge and they're prepared to develop applications with it or against it or accept it as a payment currency, that's the network that they need, and that's their sort of online community, and therefore it grows. We do have a question come in actually here from Charlie, who says, would love to hear thoughts about the price divergence between Bitcoin and Ethereum. It's a pretty topical one right now.
It is. I mean, Ethereum right now, 2,700, it's an all-time high. But let's not forget, this happened in 2017. Bitcoin peaked just before Christmas. I think it was on the 16th of December. But Ethereum carried on, into January. And made quite a lot of money in that time. And all coin rallies are a sort of tail end Charlie event. And we've seen it. We saw it in 2013. We saw it in 17. We're seeing it today. So I don't think it bodes well for the space. And clearly, Bitcoin technically is under a bit of pressure at the moment. It's below its 50-day moving average, I believe. And hasn't made much progress in a while, but still, you know, it's up there, isn't it? It's incredibly well over the last year. So who's complaining?
I think what's so interesting with this industry is it really is driven by momentum. You know, like no other perhaps, because of its internet-based, very accessible 24/7, 365 market. And we see this, don't we? As you mentioned, it happened in 2017. This shift from Bitcoin into ETH, you know, so end of last year, beginning of this year, it was all about fund flows into Bitcoin. Those have slowed, not reversed, but slowed. And now we're seeing ETH products popping up on Canadian stock exchange. You know, ETH ETFs and the AUM going into that is actually growing pretty fast. And then beyond that, you know, we're seeing a number of different coins, you know, starting to have exchange traded products against them.
So it's not just, I mean, exchange traded products, of course, have been really influential, and you know, the purpose Bitcoin fund in Canada is doing really well. That's taking in a lot of money, as is BTCE, the hand product in Germany. So those two really have been the drivers in the market. The closed-ended funds have kind of stopped taking inflows ever since the ETFs have really come to be, particularly in America. You know, when you've got an ETF versus a closed-ended fund, you'll always take the ETF because you haven't got the risk of it falling to a discount. And the grayscale discounts are now about 10%, I think. So that's not going to take any money so long as that maintains the case.
Yeah. So we've got another question come in here, which is, do you feel like Ethereum and other application blockchains tend to cater just for crypto natives? Okay, so, you know, are blockchains, crypto networks accessible, useful to the real world yet, or is it just all for the space?
Well, at the moment, they're just useful for the space, but I think that the space is expanding, and there comes a tipping point when the space is big enough that it becomes the real world, in a sense, and the future of the real world. I think that what impresses me about the space the most is that it is an aggressive Wild West experiment that is developing new payment rails, and it just seems to work very well. And I think the whole end-to-end audit, real-time audit, and I come back to simple things like a shareholder register. You know, a company like Tesla might have 7% of its stock change hands each day. I mean, the company secretary has no idea who owns Tesla. And if Tesla shares were crypto tokens, they'd know exactly who owns Tesla.
Yeah, I think, you know, it's a really interesting question, you know, coming at it from a couple of angles. One is that we're seeing now, I think it was just yesterday, the European Investment Bank issued their first ever digital bonds on the public blockchain. So they're really sort of benefiting from that indelible public ledger that is the Ethereum network, issued 100 million euros worth of 2-year bonds. So, you know, that's useful as a sort of record keeping tool. And then we've also got maybe this is more where the question's aligned to, which is these DeFi platforms that appear to, you know, be very much sort of feeding on the crypto community and for the crypto community. What's interesting is we saw a couple of weeks ago, you know, the first real world sort of collateral debt being used or issued through the Ethereum network. And, you know, it's just incredibly exciting to see that bridge between, I think it was Ethereum, it could have been Polkadot even, but seeing that bridge between real world assets and on-chain assets. And we've got a great piece of research by our digital asset analyst, Tom Salter, on that coming up. So do keep a lookout for that on our insights page. So Charlie, we've got a fan of yours from Newscape, where you used to work as an investment manager. And he has asked a couple of questions here that I think are really great questions. Do you think the maximalist projections for Bitcoin price, which seems to be at the moment around $300,000, the kind of Nova Gratzes of the space, doesn't take into account the cost of transactions on the network? Does not properly take it. Yeah, does that make sense?
I get that. Well, I mean, those projections come from the stock to flow model. I mean, gosh, at the top of my mind, I can't remember exactly what happened in each event. But you had these massive rises in Bitcoin, 8 doubles in the first, before the first halving, 6 in the second halving, and then 4 and 2. And if you sort of assume that the price can double 8 times each halving or 6 times each halving, then great, then you get these big numbers. But actually, it's been 8, 6, 4, 2 has been the real life experience, which is still fantastic. And let's face it, the peak last cycle was 20k, the peak this cycle 60k, and you could just about make that 2 doubles if you take a bit off, shake a bit off at each end. And so previous halvings have had much higher performance, but don't forget, we're dealing with $1 trillion. $1 trillion is heavy. So to push $1 trillion to 5 trillion, I think you say 300,000, so that's 6 trillion. That's a lot of money to create in a short space of time. Much easier to go from 10 billion to 100 billion than to go from 1 trillion to 10 trillion. Indeed, we saw that with the social media stocks. In the decade 2000 to 2010, most of these were unlisted. But indeed, they created value of $1 trillion between them. And then in the next decade, the last decade we just passed, they went from 1 trillion to 5 trillion. So they created more money, but the percent rise was nothing like as exciting. It's that sort of analogy I'd look to. So if Bitcoin's going to 10 trillion or 20 trillion in the next 10 or 20 years, it can do that, but it can't happen overnight. Notwithstanding the fact Dogecoin just did. So it didn't go into the trillions, but it went to 40 billion from nowhere. And I think that's because people like me who owned a little bit of Doge in 2014 lost it. I really do. I think people have just forgotten about it, and it's generally just sort of been lost in the ether somewhere. And so of course, there's lots of Dogecoin kicking around, but people will find it and they'll sell. With Bitcoin, they won't. They haven't lost it. They've got it. They're very conscious of their holding. But it's hard. And he mentioned the fee point. So fees in the future will be really, really high as the block reward comes down. So 100% of the block reward will be, of the miners' revenue will be fees in sort of 20 years' time, or 90 something percent. So Bitcoin fees will be high. I mean, Michael Saylor says it doesn't matter because it's a monetary asset. This is not the volume. It's the settlement. And so if you think of it in those terms, then that's fine. But yeah, I take the point. My point on why 3 trillion is hard, a 3 trillion valuation, $300,000 Bitcoin at the moment, is because you just need a lot of inflows. You need big cash inflows. You need $300 billion between now and 2024 to see that happen, and that's big money.
That is a lot of money. For our audience, then, give us a thumbs up if you think that Bitcoin will hit 300,000 in the next 5 years. Let's say. Let's keep it nice and open. So let's look at the next question here from the same gentleman. Yeah.
Yes, before we go on to the next question, I mean, a point on that, the fun to be had in crypto is the trade. And so, we know it goes up a lot and then it goes down a lot. I mean, that's been the history. And if you have some knowledge of how it works and you can trade that cycle, that's where the real fun is. And it keeps on happening. So in other words, to make a lot of money, you do not need Bitcoin to go up. You just need to understand it. And that's why we have ByteTree.
That is exactly why we have ByteTree, and you can find fund flows on ByteTree AM, and you can find the on-chain activity at ByteTree.com. So we've got a question here about Cardano. Now, I don't know a huge amount about Cardano. I'm not sure how sharp you are on that yourself. But the question is about how blockchain can be useful as a means of identity or keeping certificates of education in a developing country like Ethiopia, and whether those applications will mean we see blockchain sort of technology spread further across the world and into different applications. And I think absolutely that's true. I mean, I can't comment on Cardano specifically, but the only thing that I know specifically about it is that it is more scalable, but there is a compromise there with security in the scalability trilemma between your decentralization, your security, and the cost of transacting. But the whole idea of a blockchain is that you can keep this indelible record on the internet that can be verified by anyone at any time, and that's extremely useful in countries that have poor infrastructure, perhaps corruption, in government and governmental organizations. So yeah, I think what Cardano are doing as an organization, or I think it's IOHK, is reaching out and running these projects that aren't necessarily confined to creating hype cycles in their coin, the sort of ADA, but actually bringing real world applications, using blockchain that are solving real problems. So that's something that they do really well, and we don't see so much of that in the news because a lot of it isn't attached to a price. There isn't. The only real reason to have a price attached to a coin on a blockchain is to incentivize miners to sort of secure the network, which is important if it's going to be fully decentralized. But there are varying degrees, of blockchains that you can use that don't necessarily need to have a coin. So you could have a group of approved entities that were all nodes on the network, and the consensus was 75% of those entities had agreed to add these transactions. So you don't have to have a coin in order to be a blockchain, but to be fully public, you do. And there's nothing quite like Bitcoin.
Well, I agree with that. I don't know much about Cardano, so I have no comment on that. But the whole scope of the space is precisely as you described. There's so many applications we're only finding out. And I think you have to be bullish on the concept of blockchain. It's pretty hard not to be. In fact, I don't know many people who aren't bullish on the concept of blockchain. A lot of skeptics on the price of Bitcoin and the price of Doge, but not on the underlying source behind them.
Agreed. So we've got another question here, which is about Charlie. This is a good one for you on your view on current macro sort of climate. What are we seeing across the market, and how does that play into Bitcoin's future sort of price, let's say in the next sort of 6 weeks?
Yeah, well, it should be ideal. I mean, what we've got today, literally the last few weeks, is a slipping dollar. Earlier this year we saw the dollar trying to go up again, and luckily the rally sort of stalled. So the dollar's been soft. We've got the bond yield going up, which, as I pointed out many times before, that's been historically risk on and good for Bitcoin. And we've also got inflation expectations literally at an 8-year high in the States, and so it should be absolutely ideal macro conditions for Bitcoin. So the fact that it's softening in the face of strong macro conditions, where, by the way, the precious metals are stepping up, is probably more to do with the hype cycle than anything else. Our fair value for Bitcoin on ByteTree is around $35,000. Price is quite a lot higher than that. I think it's 40% above fair value at the moment, last time I checked. And so, that could easily come back. The fair value is there for a reason, and people laugh at it, but by God, it's got 10 years of testing behind it. And it can be out of kilter for a while, but all the times that the price of Bitcoin's dipped down towards fair value or below fair value over the last year have all been strong buying opportunities. Not one signal's been wrong. So I think that's one of our strongest indicators on the site.
No, I agree, and I think anyone watching this video, we really encourage you, if you are interested in the metrics and maybe you don't quite understand them, do let us know. Ask us to explain specific metrics to you, and we'd be very happy to do videos on them or otherwise. There's a huge amount of data there, and we can always be better at communicating that. So do give us your feedback and let us know. Okay, so we don't have any other questions there. So I think we're going to wrap it up for today. This has been Ask ByteTree with Charlie Morris and myself, James Bennett. Thank you very much for joining, and we'll see you next time. Goodbye.